The other thing is, well, other countries have been buying a lot of gold because I think they see this coming, and this Bretton Woods like realignment of which Besant spoke about in an interview before the election. He sees it coming. The only way to settle accounts internationally between nations is with gold. And if you revalue the price of gold, you make that debt worth less. And that's why I think all this gold, physical gold, is flowing into New York. I think it's much bigger than just a few hedge funds or bullion banks bringing it back. It's the U.S. government bringing the gold back that they leased out probably from their reserves at Fort Knox.
Recent movements in the gold market, particularly the significant flow of physical gold from London to New York, indicate potential structural changes in the global financial landscape. Financial analyst Mario Innecco interprets various nations' increased acquisition of gold as preparation for a substantial transformation in international monetary systems, potentially linked to debt management strategies through gold price revaluation. The transportation of physical gold between international financial centers has reached notable levels, creating supply pressures in traditional storage locations. Historically, the Bank of England is a primary repository for physical gold reserves and has experienced inventory constraints as substantial quantities are relocated to New York. Jacob Kirkegaard of the Peterson Institute for International Economics notes this unusual pattern, highlighting the distinct roles of these financial hubs, New York's prominence in futures trading, and London's traditional position as a physical gold storage center. This redistribution of physical gold reserves coincides with several significant monetary and trade developments. The Federal Reserve's decision to maintain current interest rates, combined with President Donald Trump's proposed tariff implementations, has created a complex environment affecting precious metals markets. The gold price trajectory has consistently appreciated since January, achieving new record levels before a minor correction. The convergence of these factors, physical gold movements, monetary policy decisions, and trade considerations, suggests a potentially transformative period in international finance. Nations worldwide continue to expand their gold reserves, indicating a broader strategic repositioning within the global monetary system. According to Mario Innecco, this preparation phase could signal anticipated changes in how international financial relationships and debt obligations are structured and managed. Before we dive into the video, don't forget to subscribe to our channel and click the bell icon to ensure you never miss an update. This way, you'll always stay informed about our latest content and insights.
The other thing is, well, other countries have been buying a lot of gold because I think they see this coming, and this Bretton Woods like realignment of which Besant spoke about in an interview before the election. He sees it coming. The only way to settle accounts internationally between nations is with gold. And if you revalue the price of gold, you make that debt worth less. And that's why I think all this gold, physical gold, is flowing into New York. I think it's much bigger than just a few hedge funds or bullion banks bringing it back. It's the U.S. government bringing the gold back that they leased out probably from their reserves at Fort Knox. Yeah, the Bank of England per se, they hold that gold in their vaults, but I'm not sure it's going to war with the Bank of England. They just want the gold back. Yeah, it doesn't look good on the Bank of England. Yeah, the Bank of England is more of a custodian for a lot of foreign nations, for some of the ETFs, and for the members of the LBMA, which are the bullion banks, which happen to be some American banks as well, like JP Morgan, Citibank. So that's I don't think he's going against the Bank of England per se, but indirectly it is, because we found out last week from an FT article that's taking 4 to 8 weeks to deliver spot gold, which usually takes a few days.
We hear this all the time. The city of London is kind of like the central hub when it comes to world finance. Why is the Bank of England the custodian of all this gold?
Well, let's start 1,000 years back. William the Conqueror, when he came over, the city was already quite an important trading hub, and he gave them independence. He said, you can stay sovereign, and it's been ever since. It's the square mile, it's called. So even though if you're in the UK or in London, you can walk into the city, there's no borders or anything. It's a bit like the Vatican. The City of London is kind of independent of the UK, but the LBMA is London Bullion Market Association. It's not really an exchange. It's just banks dealing in gold over the counter. That's been around over 150 years. London's been the center of gold trading, and that's why it's been so important, and still is to some extent. You know, in the 19th century, we had the gold standard, and that wasn't a system that was set up through a conference or anything. It just grew out from organically, and Britain had the empire. A lot of trade went through London, and that's the reason why. And also during World War II, for example, a lot of European nations they sent their gold to London because they were scared that Hitler did invade many countries and take their gold. So being an island, it's having the English Channel and the North Sea, the Irish Sea is like a moat. So strategically, it's that's why people and countries have kept their gold here. And and it's because of tradition. But and the other thing, I think London has been the center of foreign exchange because gold and silver have, they're part of the foreign exchange market before we went off gold. That's where the foreign exchange market grew up from.
Mario Innecco's analysis highlights the complex relationship between gold, the US dollar, and the global financial system established by the Bretton Woods Agreement. Under this historic arrangement, the dollar held a unique position as the world's reserve currency, with other currencies essentially functioning as dollar derivatives rather than being directly tied to gold. The Bretton Woods system, implemented in the post-World War II era, created a carefully structured monetary order where foreign currencies maintained fixed exchange rates to the US dollar. The dollar, in turn, was backed by gold at a congressionally established rate. This system provided stability, but created inherent tensions in the global financial markets. However, by the 1960s, the dollar began experiencing significant strains within the constraints of the Bretton Woods framework. These pressures ultimately led to a pivotal moment in 1971, when President Nixon suspended the dollar's convertibility into gold, effectively ending the Bretton Woods era. As Innecco points out, this fundamental shift in monetary policy has important implications for modern debt management. In the current financial landscape, Innecco argues that currency debasement through inflation has become the primary mechanism for managing overwhelming debt burdens. While this approach can make the debt more manageable from a governmental perspective, it comes with a significant downside: an increased cost of living for the general population. Let's get back to the interview.
Well, there's only two ways to solve the debt problem. One is to default, just stop paying it. And the other one is to default through debasement of the currency or through inflation. I think they're going to choose the latter, and they're going to do that through the gold price, because ultimately the dollar can only be debased versus gold, because since the Bretton Woods Agreement, that's the way it's been. The dollar was as good as gold. The other currencies were as good as the dollar. So they're all derivatives of the dollar, but not of gold. So the only way to default through inflation is through currency debasement. And that makes the debt a lot more manageable. It's not going to, that's how I think they're going to do it. And it's going to be painful because cost of living is going to go higher. But at the same time, there will probably be a big move to more businesses starting up in the U.S., more manufacturing because of the tariff situation. So it's difficult to say, but that's the way I see it. That's the only way. Doge might help a bit, but I don't think it can solve the problem anymore. We're too far gone in terms of the debt. That's the only way to do it. Because the other option, as I said, you default, but then everything collapses and there's no currency. The currency collapses and you get a Great Depression. So I think they're just going to inflate away the debt, and they're going to keep. I saw Bessent said the other day that he wants long-term treasury yields lower, and they will probably get that, but it will be in a currency that's worth a lot less. So I think that's how they're going to keep it going. Just deflate away the debt. It's going to be what they did after World War II, but it's going to be a lot worse, I think, of financial repression. That's what we're going to see. But at the same time, I think they're going to deregulate a lot. They're going to maybe abolish the income tax. So yeah, it's going to be it'll be interesting. I mean, I don't think we've been in such a kind of situation before. Trump likes to be. He's a bit of a, how can I say, he trolls people, right? And I don't think he's going to end up annexing Canada or anything, or the Canadians are going to vote to join the United States, but they're going to have closer relationship. And the same thing for Mexico and also South America. And I don't know about Greenland. Maybe they're only got like 57,000 population. They want to be basically independent, but you never know. They could join the U.S. as a territory. I don't think there's enough population there. But that's how I see it. I don't really think he's pro a North American Union, because that would mean that that would mean giving up sovereignty to something bigger. Like just like in Europe, each individual country in Europe, a European Union, gives up sovereignty to Brussels. If there were a North American Union, where would the capital be? It might not be Washington, D.C. So yeah, I don't see that. I think that's more of a globalist play.
The approach focuses on using gold as the key solution to manage debt and currency devaluation. Revaluing gold allows inflation to reduce the burden of national debt while maintaining the financial system. Gold's historic role as a stabilizing asset in times of economic crisis suggests that it will play a crucial part in addressing the current challenges, making it an essential factor in future financial strategies. What do you think? Will gold solve the growing debt crisis? Let us know in the comments below. If you found this video insightful, don't forget to like and subscribe for more content on the global economy and gold's role in it. Thanks for watching.